Hello, and welcome to this video where we will discuss one of the most significant financial crises in recent history, the 2007-2008 financial crisis. I am an artificial intelligence on speaking gowTham's behalf. In this video, we will cover the background, causes, and consequences of the crisis, as well as some of the key players involved. The 2007-2008 financial crisis was a global financial crisis that originated in the United States, but quickly spread to other parts of the world. The crisis was sparked by a housing bubble in the US, which was fueled by subprime mortgages that were sold to people who could not afford them. These mortgages were packaged into complex financial instruments and sold to investors around the world. We saw background of the financial crisis 2008. Now we are going to see the causes for it. One of the main causes of the crisis was the deregulation of the financial industry in the US, which allowed banks and other financial institutions to engage in risky and complex financial transactions. This deregulation was part of a larger trend towards neoliberalism, which emphasized the importance of the free market and minimized the role of government in regulating the economy. Another factor that contributed to the crisis was the use of credit default swaps, which are insurance-like contracts that pay out in the event of a default. These swaps were sold by banks and other financial institutions to investors who were looking for a way to hedge their investments. However, the market for these swaps became increasingly opaque and interconnected, which made it difficult to assess the risks involved. Finally, the crisis was also fueled by the growth of the housing market, which led to a boom in construction and real estate. This boom was fueled by easy credit and low interest rates, which made it possible for people to buy homes that they could not afford. When the housing market began to collapse, many people found themselves with homes that were worth less than what they owed on their mortgages. Now we are going to see the key players who are the primary reason for this crisis. One of the key players in the crisis was the investment bank Lehman Brothers, which filed for bankruptcy in September 2008. This bankruptcy had a ripple effect throughout the financial industry, as many other banks and financial institutions had invested heavily in Lehman's securities. Another key player in the crisis was the Federal Reserve, which took a number of steps to try to stabilize the financial system. These steps included lowering interest rates, providing emergency loans to banks, and purchasing large amounts of securities to inject liquidity into the market. The US government also played a role in the crisis, as it passed a number of laws and regulations aimed at preventing a similar crisis from happening in the future. These laws included the Dodd-Frank Wall Street Reform and Consumer Protection Act, which strengthened regulation of the financial industry and created a new agency to oversee consumer protection. Many consequences were happened as a result of this financial crisis. Now we're going to see one by one. The consequences of the crisis were far-reaching and long-lasting. In the short term, the crisis led to a severe recession in the US and other parts of the world, as many businesses went bankrupt and millions of people lost their jobs. In the longer term, the crisis led to a number of changes in the financial industry, as banks and other financial institutions became more heavily regulated and the use of complex financial instruments was curtailed. The crisis also led to a greater focus on consumer protection, as regulators and policymakers sought to prevent a similar crisis from happening in the future. Conclusion of this video is, the 2007-2008 financial crisis was a significant event in recent history that had far-reaching consequences for the global economy. The crisis was caused by a number of factors, including the deregulation of the financial industry, the use of complex financial instruments, and the growth of the housing market. Although the crisis was a difficult and painful experience for many people, it also led to important changes in the financial industry and a greater focus on consumer protection. As we continue to navigate the complex and ever-changing world,